What's up everyone? This is my 15th dividend income report video. This is where I go over what stocks have been paying me dividends, what stocks I've been buying, what are my best and worst performers in my portfolio, and more. So let's get straight into my dividend payments for this month. In the month of May, I had 8 dividend payments, and we started strong on May 1st from Verizon of $3.95. So as of the first day, my total was $3.95. My next dividend payment was on May 4th from JEPI, where I got $2.12. So as of May 4th, my total was $6.07. My next dividend payment was on May 10th from Lowe's, and I got 74 cents, bringing my total so far to $6.81. The next 3 dividend payments I got were all on May 15th. I started off with 45 cents from Main Street Capital, and then I got $1.04 from Realty Income, and then I ended the day with 74 cents from Procter & Gamble, bringing the total so far to $9.06. My next dividend payment was from Apple on May 18th, and I got 35 cents, bringing my total so far to $9.41. My last dividend payment was on May 26th from Starbucks, and I got $1.50. This brings my total for the month of May to $10.91. And now my new average for the next 12 months is $13.58. And if I didn't touch this account for the next 12 months, I'd receive $162.58 in dividend payments, completely hands-free. If you rewind the clock 1 year to May of 2022, I got $2.45 in dividend payments. So my May dividend payments have increased 441% compared to last year, which once again is kind of an inflated number because May was still early on in this dividend portfolio last year. But it's cool to see that in the last year, my May dividends have increased over 400%. If we look over at my portfolio's performance, we can see that May has been one of the worst months so far. I was down over -5%, meaning I was beaten by the S&P 500, Dow Jones, and NASDAQ, meaning the market just beat me up this month. I couldn't compete with them. And if you can see, I contributed $250 in this last month, but ended up losing $184 in capital gains. As you can see, there were only 2 positions in my portfolio that did not go negative, and the best position in my portfolio this month was Apple at a positive 6%. The second best position in my portfolio was Intel at a positive 0.8%, and the third best position in my portfolio this month was UGI at a negative 0.14% loss. UGI actually had a drop of about 18% this month, but I just started my position this month and kind of bought at about where it stopped going down. So right now I'm only a little bit in the negative, and actually got to start my position in UGI at a good price, but I'll talk about that more later. Now let's look at my 3 biggest losers, and this is gonna hurt a little, but the third biggest loser for me was 3M at negative 11.6%. My second biggest loser was Starbucks at almost a negative 15% loss. And my biggest loser in the month of May was Target at a negative 16.9% loss. Generally, what I like to do is if all the stocks in my account are going up in a month, I try to save a little bit of that money I'm contributing. And then when all the stocks are going down in my portfolio, I can tap into that extra cash and get a little more bang for my buck when I'm buying stocks. So let's talk about UGI, the new dividend company that I added to my portfolio. If you noticed my portfolio was lacking a utilities company, you'd be right. So I was looking to add some type of utilities company just to have a little bit more diversification among the sectors in my portfolio, and I came across UGI. In the past 6 months, they are down about 27%, and they're very, very close to their 52-week low. So I thought it was a good time to pick up some UGI. If you look at UGI's dividends, you can see they are a dividend aristocrat with 35 years of dividend growth. Right now they have a juicy dividend yield of 5.36% and a payout ratio of 50%, which I'm definitely comfortable with. And their 5-year dividend growth rate is 7.5%, which is respectable. That was the only new position I added this month, so let's just look at all the contributions I had in May. The first thing I bought in May was 1 share of SCHD, like I've been doing every month. And I also got that at a discount because SCHD has actually been going down recently. So if you're worried about SCHD, I do personally think it is a good time to start accumulating more because I think SCHD is going to be the best ETF for dividends in the long run. The next thing I bought was a share of JEPI for $54. And then I bought some UGI. I bought 2 shares of UGI for $55. I also bought about $55 worth of Realty Income. Now, Realty Income is under $60 right now. When it's under $60, that's definitely a good time to consider buying some more. And the last 2 stocks I bought were Verizon and Target. I got $30 of Verizon and $25 of Target. Both of these are stocks that have also gone down a bit recently, so I wanted to start accumulating a little more for a better price. Because the market was down so much this month, I actually did tap into a little bit of that extra cash I had on the account because I contributed $250 this month but bought $289 worth of stocks. So now let's go over to the dividend tracker to see all the stocks that are going to pay me in June. June is one of the big 4 months of the year where most companies pay their dividends. So for me, June is one of the 4 highest paying months I have in my portfolio. So let's go over the dividend payments I'm going to get in June. Now, the dividend tracker isn't 100% accurate with the numbers, so the total is not going to be exactly what I get in June. But on the 1st, I'm going to get paid from Intel. On the 3rd, I'm going to get paid from JEPI. On the 6th, I'm going to get paid from Johnson & Johnson. On the 10th, I'm going to get paid from Target. On the 12th, I'm going to get paid from 3M. On the 15th, I'm going to get paid from Realty Income. On the 26th, I'm going to get paid from SCHD. On the 28th, I'm going to get paid from Main Street Capital. And on the 30th, I'm going to get paid from Pepsi. So in June, I'm going to get about $17 to maybe close to $18. We'll see in the next video, but yeah, that's what it's looking like for now. So before I end the video, I want to go over my plan for June. In June, I'm just going to invest in the positions that are down in my portfolio so I can lower my average buy-in price. But I want to mention that I'm going to stop investing in SCHD every month in this portfolio because in my last video, I started my Roth IRA, and in my Roth IRA, I invest 25% of my account into SCHD. So there's really no need for me to automatically be buying SCHD. But if SCHD is continuing to go down in share price and I want to lower my dollar cost average and just buy some cheap shares of SCHD, I'm still going to do that. But the automatically buying 1 share every month is over for now because I don't need to do it in this portfolio. So yeah, that's basically everything for this month. If you want to check out me opening up my Roth IRA and everything I'm doing in that, check out this video. And if you want to watch all the other monthly dividend income report videos, check out this playlist. But if that's all, peace.